Wednesday, July 22nd, 2:04 p.m. New York time. Welcome back, investors, to Wall Street's Money. As well, happy hump day on this Wednesday. Yep, already halfway through the month, closer to the end of the month. Big event this month. Next Wednesday, United States Central Bank, aka Federal Reserve, has an FOMC meeting. That's going to impact the equity market between now and then, and the other financial markets, metals, yields, which have a correlation and impact on the stock market. So like the video says, update. I shared a trade idea last Friday during market hours that I was taking a bullish trade in the S&P 500. I did, and I'm still in that position, and I have gains. I plan on closing them before next Wednesday for profits. Might even close them this week before the end of the week for profits. But right now they're gains. I bought on a dip. I was a contrarian when I was looking at the data of prices and orders going in on the options on the S&P 500. There was more people buying puts than trading bullish, buying call options. So again, I did the contrarian. The market sold off, actually gapped down in that day. And I'm bullish the longer time frame. Not buying at the highs. I'm buying on the dips on weakness. Contrarian. Yep. So we're looking at a daily chart of the S&P 500 cash index. Yellow horizontal line, the high of the year. So that day here was the Friday, and I bought that position. And since then, it's been making higher highs. Trend is up. Good for me. See this yellow arrow pointing down? That day, I also shared a bearish trade idea. Closed it for profits. Both of these trades are using options. I did not stay until expiration. I got out before. Good money management. Just like I shared with you my current position. I'm not staying into option expiration. There's a big event coming up and I have gains. Why would I want to have those go to negative? I want to close them for real profits. So looking here at a top-down chart, there's 20 years of history, S&P 500. Monthly charts. Like I said, today's the 22nd. Already halfway through the month. See that yellow candle? That's it. That's a small trading range. We haven't taken out the high or low of last month. All these days, the market still hasn't decided if we want to break above or below last month. That's concerning. Last month, we made the all-time high for the year. Last month, on the monthly candle, we closed red. We closed back inside the range of last month. It's that red body. It closed inside that green body. So I currently have a Fibonacci tool here. And this is very suspicious. Again, the month's not over yet. Big event coming, FOMC. This is a dodgy candle forming. Top of a trend. Dodgy candle. Very interesting. The timing. To a weekly chart. 5-year history. We had distribution here last year. Marked down. Low of the year. Reversal. Now we're in a consolidation. This consolidation over time will determine if it's distribution or accumulation. We're looking at these big red bodies, candles. They're much bigger than many of the candles around them, showing more signs of distribution, smart money selling. But again, I see opportunities within this, trading both directions, which I've done. So last week, big red candle. This week, we're doing a retracement. It's that red candle. I have midpoint labeled as gray. We're doing a retracement retracement in that. And I'm concerned it might just fill to even close up here. That's why I'm looking also to close my trade this week. Yep. Again, big red strong bodies. Not much what I see as singles as accumulation. Let's take it to the lower time frame, the daily. So we're looking here at the ES S&P 500 futures. Again, daily chart, look at these big red candles. Up here on top, weakness. Here, massive consolidation, almost like a bar coding. Big sell-off here. It was swing low here, hasn't been taken out yet. But the daily candle, again, did a retest of this midpoint of this green candle. Nice. Buyer stepped in, made a new high for the day. It's just not holding strong. Yep, I'm concerned. Let me do a Fibonacci right now. From here to the bottom, top of that candle, to the low, to the red. So it's only in mid-range. That's concerning. Yeah. Let's take it to the, excuse me, SPX. That's the cash index. Yeah, that's looking very suspicious over here. Let's take it to the intraday, the 4-hour. So this helped me also determine my trades. We're looking here at the 4-hour chart. The red, supply zone sellers. The green, demand zone buyers. This here, zoom in some more. We had a high here on the 4-hour chart. Then the days later, we made a higher high, which also happened to be the new higher that week. Higher high on weakness. Sell off. Nice. And then we had a swing low here, swing low, which also started to form the demand zone, the green area. So then we had here earlier, let's put this for 15 days. So here, last Friday when I took that trade, notice this low here, big wicks, demand zone buyers. We went there and we never took it out. So again, people stepped in early, put their big pants on and bought up here. And I bought up here. Here. Nice. And currently, we're back above the monthly open. See this red horizontal line? And this morning, we had this yesterday, made a demand zone, extended out here, demand zone this morning. Big reversal. Look at that big, strong green candle. So naturally expect some kind of retracement in that green candle. Let's do a Fibonacci. There we go. It might even be like a pole and a flag. Nice. This is all real time. The market's open right now. Nice. So broke above the supply zone. Broke above it and closed above it. Big, strong green candle. So we want to expect natural retracement. And again, looking for the opportunity to reload or to take profits on the current one. Time will tell. Patience. Good trading. Good money management. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching. Thank you kindly for your support.